What if I told you that two of the world's biggest powers are trading billions of dollars without using the US dollar at all? No headlines, no breaking news alerts, but quietly a financial shift is happening. China and Russia are rewriting the rules of global money. And if this strategy succeeds, the world, prices, power, sanctions, even wars, could change forever. So why are they doing this? How are they doing it? And should the rest of the world be worried? Let's break it down simply. For decades, the United States dollar has been the world's king. Not because everyone loves America, but because the entire global system was built around it. How deep does this go? Most oil in the world is priced in dollars. Most international trade is settled in dollars. Most countries keep their savings, called foreign reserves, in dollars. So even if two non-American countries trade with each other, the payment usually passes through the dollar system first. That's where the real power comes from. Empires once conquered land. Now they control cash flows. Because the dollar system runs through American banks and rules, the US has a unique weapon. Sanctions don't destroy cities. They quietly starve them. If a country disobeys US rules, it can be cut off from dollar payments. This doesn't require war. It doesn't require soldiers. It's done with banking instructions. And the most powerful example of this happened very recently. This isn't theory. The world just watched it happen. When Russia invaded Ukraine, the response was not only military or diplomatic. It was financial. The US and its allies did three devastating things. Number one, Russian banks were frozen. Hundreds of billions of dollars belonging to Russia became unusable. When people hear Russian banks were frozen, it sounds technical and confusing. So let's explain it like real life. What was frozen? Before the war, Russia had saved hundreds of billions of dollars. Not in cash, not inside Russia, but stored in banks in the United States, banks in Europe, global financial institutions. These savings are called foreign reserves. Think of them as a country's emergency savings account. What does frozen actually mean? Frozen does not mean stolen. It means Russia still owns the money, but cannot touch it, can't withdraw it, can't transfer it, can't use it to pay bills, can't use it to defend its currency. It's like your bank app showing balance, $1 million. Available to use, $0. Money is there, but it's locked. Why was this so powerful? Because this money was used to pay for imports, stabilize the ruble, handle emergencies, support banks in crisis. Once frozen, Russia faced problems overnight. Prices jumped, currency fell, trade became chaotic, not because Russia ran out of oil or gas, but because it lost access to its own money. Forget geopolitics for a moment. Let's break this down with a simple life example. Imagine this. You work for years. You save money. You keep it in a trusted bank. One day, the bank says, you broke the rules. Your account is temporarily blocked. You still have the money, but you can't pay rent. You can't buy essentials. You can't help your family. That is exactly what happened to Russia. On a national scale, why this shocked the entire world. Countries realized something scary. Even national savings are not safe if they're stored inside the dollar system. This single action did more damage than many military attacks, and it forced Russia and others to search for a way out. In a modern world, power is not about how much money you have. It's about who controls your access to it. Number two, Russian banks were removed from SWIFT. This system is how banks talk to each other across borders. Without it, sending or receiving money becomes slow, expensive, or impossible. What does Russia was removed from SWIFT really mean? First, let's understand SWIFT in the simplest way possible. SWIFT is not a bank. It does not move money. It is a messaging system. Think of it as the world's banking WhatsApp. When one bank wants to send money to another bank in a different country, it sends a message through SWIFT saying, I am Bank A. Please transfer this amount from my customer to that customer. Without this message, the money doesn't move. What happens when a country is removed? When major Russian banks were removed from SWIFT, banks could not easily communicate with foreign banks. Payments had to go through o fax, o e-mails, o middleman banks, o manual aprovados. What took minutes now took days or weeks. And sometimes it didn't happen at all. Let us understand how this works through Russia's oil money. Even after sanctions, Russia continued selling oil. But here was the problem. European and Asian buyers wanted Russian oil. Russian sellers wanted payment. But banks couldn't talk to each other properly. Without SWIFT, payments got stuck. Some buyers delayed payments. Others demanded discounts. Some deals collapsed completely. Russia was selling oil, but money was not flowing smoothly. This caused cash shortages, currency pressure, panic inside banks. The product existed. The buyer existed. The seller existed. The bridge between them was broken. Why this made payments slow and expensive. Without SWIFT, banks needed extra intermediaries. Every middleman took a fee. Every step increased delay and risk. So, a $10 million payment could lose thousands in fees. A one-day transfer could take 2 weeks. Many banks simply refused to deal with Russia. Time became money, and Russia was bleeding both. Let's understand this by putting ourselves in the story. Imagine this. You want to send money to your family urgently. Your UPI app is down. Your bank helpline is unreachable. Your SMS alerts don't work. Now the bank says, you can still send money, but only by visiting a branch, filling forms, waiting for approval. You have money. The receiver exists, but the system connecting you is broken. That's exactly what SWIFT removal feels like. For an entire country. Why this shocked the world? Countries realized something dangerous. You don't need to invade a country to paralyze its economy. You just need to disconnect its banks. This wasn't just about Russia. China, India, Saudi Arabia, and others were watching closely. And they all asked the same question. What if this happens to us tomorrow? That question changed global finance forever. So friends, always remember, when communication dies, money stops moving. And when money stops moving, power disappears. Number 3, dollar and euro transactions were blocked. Russia could still sell oil, but getting paid became extremely difficult. Now here's the key point most people miss. Russia still had oil. Russia still had buyers, but money could not move. That's when Russia understood a brutal truth. In the modern world, money flow is more powerful than military force. This shock is what pushed Russia to escape the dollar system. Why this scared many other countries too. Russia was not the only one watching this. Many countries quietly asked themselves, what if this happens to us one day? Because sanctions are no longer rare. Iran faced them. Venezuela faced them. Afghanistan's reserves were frozen. Russia faced the biggest version yet. The message was clear. If your money depends on the dollar, your economy depends on U.S. permission. That realization changed global thinking. Now let's connect this to your life. Imagine this. You earn money. You save it in a bank. You use a debit card or UPI app to pay. Now imagine one morning. Your card doesn't work. Your app doesn't open. Your bank says, system blocked. You still have money, but you can't use it. That's exactly what happens to countries under dollar sanctions. They're not poor. They're not broke. They're locked out. The dollar system is like the world's biggest payment app, owned and controlled by one country, and everyone else is just a user. This is why China and Russia didn't ask, how do we defeat the dollar? They asked, how do we stop depending on it? That question is the starting point of everything that follows. Non-dollar trade, new payment systems, digital currencies, and BRICS plans. And once you understand this part, the rest of the story becomes inevitable. But how did the dollar become the world's money? Why dollar dominance was not an accident? To understand what is happening today, we must travel back to a world in ruins. The year is 1944. Europe is destroyed. Factories are bombed. Currencies are collapsing. Only one country stands untouched and powerful: the United States. And America uses this moment to design the future. If you want to know how the dollar became the world's money, comment yes below. After 1,000 likes, I'll make a detailed video on this. The system built after the war. In 1944, global leaders met and created a new financial order. This system decided three things. 1. The dollar would be the world's main trade currency. 2. The dollar would be the global reserve. 3. The dollar would sit at the center of global payments. New institutions were created. International Monetary Fund, World Bank, both worked around the dollar. Every country needed dollars to import goods, pay debts, stabilize their currency. Slowly, the world accepted a simple rule. If you want to trade with everyone, you must use dollars. The master stroke, oil, sold only in dollars. Then came the master stroke, oil, the fuel of modern life. Cars, planes, factories, electricity. The world agreed. Oil will be priced and sold only in dollars. This meant something extraordinary. Even if two countries hated America, they still needed dollars because they needed oil. This locked the dollar into the heart of the global economy. This system gave America something no empire had before. Not just military power, financial power. If a country followed the rules, trade flowed, investment came, money moved freely. If a country didn't, payments were blocked, assets were frozen, trade slowed or stopped. Money became a switch, on prosperity, off crisis. For decades, no one challenged this system because no one was strong enough. Let's understand this through what is happening right now. Now fast forward to recent years. When Russia was sanctioned, the world saw something shocking. A major power could be financially paralyzed overnight. But another moment quietly caught global attention. Saudi Arabia and China oil trade. Why this small change is actually historic. For decades, one rule was never questioned. Oil is sold in dollars. No matter who buys it, no matter who sells it. And the most important country in this system was Saudi Arabia. Saudi Arabia is not just another oil exporter. It is the heart of the global oil market. When Saudi Arabia priced oil in dollars, the dollar became unavoidable. Let's see how the dollar-oil system was built. After World War II, the U.S. made a powerful deal. America would provide military protection, political support, security guarantees. In return, Saudi Arabia would sell oil only in dollars, invest surplus money back into U.S. assets. This created what we now call the petrodollar system. Here's why it mattered. Every country needs oil. To buy oil, every country needed dollars. To get dollars, countries had to export to the U.S., borrow in dollars, hold dollars as reserves. This single agreement locked the dollar into global energy. And energy runs the modern world. Now fast forward to recent years. China became the world's biggest oil importer, Saudi Arabia's largest customer. So China asked a simple but powerful question. Why should we always pay in dollars when we trade directly with Saudi Arabia? After years of quiet negotiations, Saudi Arabia agreed to accept yuan for part of its oil trade with China. This was not announced with drama. No press conference, no celebración, because this move was strategic, not emotional. Why this move is a big deal. Let's break it down simply. 1. Saudi Arabia accepting yuan equals a new option. China can now buy oil without first buying dollars. 2. China saves currency risk. No need to convert yuan dollar oil. 3. Saudi Arabia diversifies. It no longer depends only on the dollar. It can invest yuan directly into Chinese markets. 4. Other countries are watching. If Saudi Arabia can do this, why can't others? This doesn't end dollar oil trade. Most oil is still priced in dollars. But history doesn't change in one step. It changes when choices appear. Why this was unthinkable before. For decades, this move was impossible because the U.S. guaranteed Gulf security. The dollar was stable. There were no real alternatives. Today, the world is different. Power is multipolar. Trade is shifting toward Asia. Countries want flexibility, not dependence. Saudi Arabia is not abandoning the U.S. It is hedging its future. And hedging is what smart players do before systems change. Let us understand this by using a simple, everyday situation. Now, connect this to your own life. Imagine your salary comes into one bank account only. Your rent, your EMI, your shopping, Everything depends on that one bank. One day, the bank says, new rules, higher charges, more control. You don't close the account. You don't rebel. What do? You open a second account. You keep options. That's exactly what Saudi Arabia is doing. The dollar is the main account. The yuan is the backup. And when millions of people or countries do this, the system slowly changes. Why this moment matters in history. Empires don't fall when people revolt. They weaken when people stop depending on them completely. Saudi Arabia accepting yuan for oil doesn't kill the dollar, but it sends a quiet message to the world. The dollar is powerful, but it is no longer the only choice. And in geopolitics, choice is power. The dollar is not just money. It's the gatekeeper. And once countries realize this, they don't try to overthrow the gatekeeper. They try to build another gate. Why this act matters. This is why China, Russia, and others are acting today. Not out of anger, not out of ideology, but out of experience. They saw what happens when money stops. And history shows us one truth. If oil, the lifeblood of the global economy, can slowly move beyond the dollar, then the question is no longer if the system will change. The question becomes, who controls the next system? Sanctions, when money became a weapon. Sanctions are not new, but modern sanctions are different. They don't block ships. They block bank accounts. When Russia invaded Ukraine, it wasn't just condemned. It was financially attacked. Russian banks were removed from SWIFT, the nervous system of global finance. In simple terms, Russia could still sell things, but couldn't get paid easily. This was the moment Moscow realized something terrifying. Modern power doesn't come from tanks. It comes from access to money. And Russia had just been cut off. The China-Russia money pact. Russia didn't turn inward. It turned east to China. China had long feared the same problem. What if one day it was sanctioned? So the two countries made a deal. No dollar, no SWIFT, no Western banks. Oil and gas would be traded in yuan. Russian goods paid for in rubles. By 2024, over 90% of China-Russia trade avoided the dollar. This was not rebellion. This was insurance. China understood something very early. Currency alone is not power. The real power lies in how money moves. You can hold dollars, yuan, euros, but if you can't send or receive payments, your money becomes useless. And the biggest choke point in global payments is SWIFT. China's realization, this could happen to us. China is the world's biggest trader, biggest exporter, one of the biggest importers, deeply connected to global finance. Chinese leaders asked a dangerous question. What if one day we are blocked from SWIFT? Even a temporary disruption would freeze trade, shock factories, disrupt supply chains, damage the economy. So China decided not to wait. This is China's plan B for the world's financial system. China built CIPS, the cross-border interbank payment system. CIPS allows banks to send cross-border payments, settle transactions directly in yuan, avoid dollar conversion, avoid SWIFT messaging. Think of it as a parallel financial highway, built quietly without drama. Today, CIPS connects hundreds of banks across Asia, Africa, the Middle East, parts of Europe. It is still smaller than SWIFT. It is still slower. But size is not the point. After Russia was sanctioned, Chinese banks faced a dilemma. They wanted to continue trade with Russia, avoid violating Western sanctions, reduce exposure to SWIFT risks. So what happened? Trade between China and Russia increasingly moved to yuan-based settlements, domestic payment channels, CIPS-linked transactions. Oil, gas, coal, and agricultural trade were increasingly settled outside the dollar system. This didn't make headlines, but quietly, it proved something crucial. Large-scale trade can function without SWIFT. Alternatives are no longer theoretical. Once something works in practice, confidence spreads. Why other countries are paying attention? Countries in Africa, the Middle East, Central Asia have a similar fear. What if geopolitical tension blocks our payments one day? CIPS offers them a second route, a backup option, negotiating leverage. They don't leave SWIFT. They simply add an alternative. And alternatives reduce dependence. Now, bring this into everyday life. Imagine you use one payment app for everything. Salary, shopping, rent, bills. One day, the app crashes, or your account is suspended. You still have money, but you can't pay anyone. What do you do next? You download another app. You link another bank. You keep a backup. That's exactly what CIPS is. China is not deleting SWIFT. It is installing a second payment app for the world. Why control matters more than size? CIPS is not powerful because it is big. It is powerful because China controls it. No foreign government can shut it down. Rules can't be changed overnight by outsiders. In geopolitics, control beats efficiency. And control creates confidence. Why this shifts global power? Once countries realize payments can move without the dollar, trade can survive without SWIFT. Sanctions are not absolute. The balance of power slowly changes. Not with noise, not with confrontation, but with infrastructure. Currencies create influence. Payment systems create control. And once control begins to diversify, the world quietly moves toward a multi-system financial order. When money goes digital, control becomes harder to enforce. China didn't stop at currencies, and it didn't stop at payment systems. It asked a much deeper question. What if money itself changed form? Not paper, not traditional bank deposits, but digital money issued directly by the state. That idea became the digital yuan. But what makes digital currency different? The digital yuan is not crypto like Bitcoin. It is issued and controlled by the China government. It allows three powerful things. Number one, instant settlement. Money moves directly from payer to receiver. No waiting, no correspondent banks. Number two, state-level control. The government can track large flows, enforce rules, manage liquidity instantly. Number three, less dependence on global banks. No need for dollar clearing banks, SWIFT messaging, Western financial intermediaries. This is not about speed. This is about control and independence. Recently, China joined a major experiment called mBridge, a cross-border digital currency project involving multiple central banks. What did this project prove? That countries can trade with each other, use digital state money, settle transactions without touching the dollar system. In test runs, payments that normally took days were completed in seconds. More importantly, these payments didn't rely on SWIFT. They didn't pass through U.S. control banks. This was not a press stunt. It was a proof of concept. Once something works technically, politics eventually follows. Russia learned this lesson the hard way. After sanctions, bank reserves were frozen. Payment routes collapsed. Trust in the old system disappeared. So Russia began experimenting with digital ruble, blockchain-based settlements, direct state-to-state payment links. Russia knows digital currency won't erase sanctions, but it can reduce vulnerability. And in geopolitics, reducing vulnerability is survival. Why digital money weakens sanctions? Let's break this down simply. 1. Traditional sanctions work by blocking banks. 2. Digital currency reduces the role of banks. 3. Fewer middlemen equals fewer choke points. 4. Fewer choke points equals less absolute control. Sanctions still hurt, but they become less predictable. And uncertainty weakens power. Why other countries are watching closely? Many countries are not anti-US. They are risk-aware. They ask, what if geopolitical tension blocks our money tomorrow? Digital currencies offer backup systems, faster settlement, negotiating leverage. They don't replace the dollar. They sit alongside it, and that changes global behavior. Now think about your own life. Imagine all your money is in one bank, one app, one system. One day, the system freezes. You still have money, but you can't access it. Now imagine a second option. Government-backed. Works offline. Transfers instantly. You don't abandon the old system. You just feel safer. That's what digital currency represents for countries. Not rebellion. Insurance. Why this doesn't end the dollar? Let's be clear. Digital currencies do not destroy the dollar. Sanctions, Western finance, but they do something more subtle. They remove absolute dependence. And once dependence disappears, power becomes shared. The big geo-history pattern. History shows us something important. Gold replaced silver. Paper replaced gold. Digital is now replacing paper. Every transition shifts power. Not overnight, not loudly, but permanently. Sanctions were designed for a world of banks and borders. But the future of money has no paper, fewer banks, and far fewer choke points. And that raises a dangerous question. What happens to power when money itself can't be stopped? Why the world wants choices, not one king. China and Russia are not acting alone. They are part of BRICS, a group that now represents over 40% of the world's population and a growing share of global trade. For decades, BRICS countries lived inside a system they did not control. Now, they are quietly redesigning it. In recent years, BRICS countries have quietly increased trade using local currencies. Let's break this down. China and Brazil now settle large portions of trade in yuan and reais. India buys Russian oil using non-dollar arrangements. South Africa explores regional currency settlements. This is not ideology. It is risk management. Countries are asking, what happens to our economy if access to dollars is restricted? And they don't like the answer. BRICS also created alternatives to Western institutions. One example is the New Development Bank. Unlike traditional lenders, loans are often issued in local currencies. Borrowers avoid dollar exposure. Political conditions are fewer. This reduces dependence, not only on the dollar, but on the rules tied to it. Why BRICS expansion matters. Recently, new countries showed interest in joining BRICS. Why? Because they see something changing. More members means more trade routes, more currencies, more internal markets, and every trade that avoids the dollar slightly weakens monopoly, slightly increases freedom. History doesn't shift in one dramatic event. It shifts through thousands of small decisions. Why this is happening now, not before. For decades, countries accepted dollar dominance because the system was stable. Sanctions were rare. Trust was high. Today, sanctions are frequent. Geopolitics is tense. Trust is conditional. That's why countries are not abandoning the system. They're diversifying away from risk. Now, bring this into daily life. Imagine you earn money from one company only. If the company fires you, your income drops to zero. So what do people do? They build multiple income sources. Freelance, invest, keep options. That's exactly what BRICS countries are doing. The dollar is the main job. Local currencies are side incomes. You don't quit the main job. You reduce dependence. Why this is the end of monopoly, not dominance. The dollar will still be used widely, be trusted, be powerful. But monopoly is different from leadership. Monopoly means no alternatives, no escape, total control. That era is ending. Leadership can survive competition. Monopoly cannot. The world is not rejecting the dollar. It is preparing for a future where no single currency can decide the fate of everyone else. And that brings us to the final question. What does power look like in a world with many currencies and no single financial gatekeeper? Does this mean the dollar is dying? Let's be clear. The dollar is still dominant. Most reserves, most trade, most trust, but dominance is no longer unchallenged. The world is quietly building backups, and history tells us something important. Empires don't collapse suddenly. They erode system by system. The next global order will not be decided by who fires first, but by who controls trade routes, payment systems, currency trust. China and Russia are not overthrowing the system. They're escaping it. And once escape is possible, control is never the same again. This is not the end of the story. This is the beginning of a world where money no longer has one king. Money is not just something in your wallet. It decides what jobs exist, how expensive food becomes, why prices rise, and why some nations grow rich while others struggle. The story you just watched is not about China or Russia or the dollar. It is about your future, because the world your children will grow up in will not work the way the old world did. They will live in a time where multiple currencies compete, digital money replaces cash, economic power matters more than military power, and those who understand money will always stay ahead of those who don't. If you're a teacher, this is not just a video. It is a lesson your students will never forget. Share it with them. If you are a father, your son and daughter will one day make financial decisions that shape their entire lives. Share this with them, because understanding money early is a lifelong advantage. If you're a mother, you're shaping how your children see the world. Share this with them, because financial awareness is as important as education itself. History is not memorized by dates. History is understood by patterns. And once you see the pattern of money and power, you never see the world the same way again. If this video made you think, if it made you pause, if it made you see money differently, subscribe, because the future won't be explained in schools. It will be understood by those who pay attention. This is not just a channel. This is a way to read the world. Welcome to Geo-History.